Morning, family. Welcome to another stream of what we're going to be trading today. I've noticed that when we start the streams earlier in the morning, there's more people watching. So I'm starting this one earlier than the one yesterday, which no one watched. And there's a lot of good information in that one. So if you haven't seen it, it doesn't matter that the stocks on the scanner are not the same ones as the ones that we'll be trading today. I gave a very long lesson on why news are important, how to make sure you are looking for the correct catalyst, how to make sure you don't get stuck in a flush in the middle of the trading day. So be sure to check it out. I love making these videos for you guys, but when no one watches them, I get all sad, and I think I'm doing it all for nothing. So now that we got through my SOP story, let's look at the scanner. But the reason why I bring it up is because I'm happy to start these videos earlier in the morning. We get up pretty early to trade anyway. The problem with that is there's a lot of news that gets dropped at 9 o'clock. And when we start the stream before that, we might miss, you guys, if you're not part of the chat room, you might not know what stocks we're going to be trading because they're not even on the scanner yet when I do this stream. But hopefully, this stream is just helpful for you guys to see how we find these stocks, how we draw support and resistances, and help with your studies. And then if you want to see what we're trading live all the time, you can just join the chat room. And today is actually the last day to do so. No, tomorrow's the last day to do so at a discounted price. Prices go up 100% after that, unless you lock it in. Okay, so not too many things this morning, but you guys know me. If you watch these streams, I actually prefer it when there's not that many things. I actually had a red day yesterday. I did. I ended up just taking a lot of trades unnecessarily. CEI was really good to us, and it was the main focus for the day. So once I decided not to trade anything else, I was actually able to recover a lot of my losses, but I still ended up the day red. The main reason being there were too many things to trade, and I was trading all of them, but they just weren't working out. Something that happens as a trader. Definitely, a lot of times you will end up making mistakes, and you can um, draw conclusions on what you can do differently the next time. But then sometimes, and this is what happened to me yesterday, you can do everything right. You can have your correct risk reward ratio on trades. You can pick the right entries. You can have your stop loss, but trades just don't work out, and you'll have five of them hit your stop loss. And it doesn't matter that they're small and controlled losses. When you take five in a row, they add up and you end up red. And even though I took some great trades in CEI, they weren't enough to, get me out of the gutter. So I ended up red. So anyway, I know myself because I have I keep a trading journal and I track my trades. So I know that I perform best when there's actually just one obvious stock to pay attention to as opposed to trading multiple things. So days like today when the scanner is not too crowded and there are not too many things to watch are actually days that get me excited because I feel like maybe there'll be one obvious stock that everyone's going to trade and I'm going to have a very good day. So this was the one that's spiking my attention at the most at the moment. It just dropped news 2 minutes ago. So, well, actually, that's not true because when did it drop news? At 8 o'clock. Okay, so drop news 15 minutes ago. Um, so the original news move, you guys know from yesterday or 2 days ago, we like to trade secondary news moves. So this is the original news move. This is just algorithm buying. Then we have this flag, 1 minute flag break. This would have been the secondary news move trade. If you missed that entry, you could have also just taken it here on this flat top break. Break above this is also an entry, obviously caused a squeeze. Now it's forming a flat top here, 305, break above 305, another entry. This was also another entry. At this point right here, there's no entry, so what we're going to wait for is a pullback candle, so a candle with a lower high, so we can have another flag, or if it starts making another flat top, so technically this 309 could be forming a flat top, so we can look for a break above that. One thing to know with these news moves, a lot of times they do one push, second push, and then they die after the third push. But then a lot of times also when there's not that many things to trade, they continue to move. And we saw that yesterday. There was a stock that we traded for a secondary news move. We thought it was going to die a slow death after that, but actually because there weren't that many other things to trade, it ended up having like 5 pushes instead of 3 by the time it died. Um, this one also is sort of has support. Oh yeah, of course that's it. 3 is full dollar, so it's a psychological number, but I see a lot of congestion there. So that's definitely a level. So I would be looking right now for a bounce on 3, bounce on VWAP, or break of a 1 minute flag. It's forming a 1 minute flag here too. The fact that it has had 3 pushes makes it a little extended and a little riskier of a trade. So something just to keep in mind. I also want to just check the float real quick on this so that we know what we're getting ourselves into. I like to trade low floats. Let's see. Stock. We have a bot in the chat room that checks the float very easily. So it's a very convenient tool. Okay, 32 million, that's fine. That's in line with what we like to trade. And here's a flag break, and here's a squeeze. Okay, very nice. So this one still has juice. I'll just put it here. I have CII here, CEI here because obviously it had a push in the aftermarket session, and now in the pre-market it's dropping. So that's why the scanner is not picking it up because it closed the gap. Our scanner scans for gappers. The stock closed at 318. So if it opened here, it would have picked it up. I mean, if it was there now, it would have picked it up. But because it went all the way back to 3, our scanner is not picking it up. However, from trading yesterday, I know it was a very hot stock, so I expect it to still be on the radar today. Second day runners, well, first of all, CI has been running for quite some time now. We've been trading it almost daily for the past couple of weeks. So it's not truly a second day runner, but it hit 3, I think, for the first time yesterday. And hitting 3 is a big thing for these stocks. It has a lot of implications in the way they trade and the margin that traders can get, etc. So it had a lot of volume and volatility yesterday. So with that said, I know that traders will be looking at it today, and it's obvious, it has 12 million shares being traded before 8:30, 3 times the top stock on our scanner. So obviously traders are watching it. However, a second day runner is normally a short seller's trade. They like to trade second day runners. So normally there's more short opportunities than long opportunities. However, us as long bias traders that focus on stocks with low floats and high short interest, we know that we need shorts to cause squeezes. And this stock, obviously, here on 330, it's where shorts started heavily selling in. And then once it failed below 3.2 is when they literally destroyed it. So the first area for me to look for a short squeeze would be break above 3.2. That can start the original squeeze. And then if we break above this 330, we can go and push higher days. So I'd be looking for an entry on this one on break above 320. So let me just tell people that are not watching this stream. Oh, and also it closed at 322 yesterday. So that's, making it an even bigger level. And then 3.3, 3.5, and 3.75. Okay, sounds good. Well, actually, I can just open the chat room real quick. Okay, so that's that for CEI, and then this one. Now it's forming a 5-minute flag, so still holding VWAP, so it could still provide opportunities. I guess it gave a VWAP bounce. Okay, this is a known stock in the trading world, but It's below VWAP. It's maybe trying to bounce here in EMA. If it gives an EMA bounce, that's a potential trade. Let's see. EMA to VWAP, 6%. So there is enough there to catch a move. So that would be a potential trade. If it doesn't quite catch EMA, then we can do the first 5-minute candle to make a new high, depending on where it is and whether it gives enough room for a safe trade. This one, obviously, we see here a lot of candles rejecting this general area of 930. So I'd be looking for a break above that level for a potential squeeze. That's probably a safer trade for me personally. I don't love reversal trades, as you guys may know, but I like reversals. Really, the only reversal I like is an EMA 20 bounce on a 5-minute chart. So yeah, it's sort of, I mean, this is, what is this, 850? Yeah, that's where it's really bouncing on, because 850 is such a key psychological level. It's finding support there, even though it's not quite touching EMA. So I guess, if you do an 850 bounce and you expect EMA 20 to be support, if you wanted to trade an 850 bounce with stop loss below EMA 20, that's a good risk reward ratio, because you're risking 7 cents to make 30, because you want to like safely get out, so even 40. Okay, so we can add that one to our interests as well. And then the other ones are volumes too low right now to even bother with them. So that's it really for this morning in terms of what's on the scanner. Now that we broke below VWAP, we're not that interesting anymore here. Again, it's a news move that probably is just dying a slow death. The top of this candle, 2.9, could serve as support, but let's see where EMA 20 is on the 1-minute chart. Yeah, so if it stays in this general area, maybe I would try and squeeze another trade. The problem is EMA and VWAP are so close that there's no room to really safely trade it. Yeah, just less than 2%, so you can't even make 1% on that trade. And forget about making money, you just can't safely execute something like that. So it would be better if it pulled back to here, and then you have room to EMA and then potentially VWAP. But again, it could just be done for the day. Now I have some time. I actually pulled this up for you guys, the S&P 500 chart, because we've had a secondary market sell-off, and we were actually talking about this in one of the morning videos last week when we said, well, it looks like we're finding a bottom here, and then I think on the VO chart we saw, where we could potentially see profit taking, and that's exactly where it reversed back again. Now, it was consolidating there for 3 days, so potentially there was some profit taking, and then this last tank is really due to the yield rising. So it's not, necessarily just because of that technological level. It also had an actual, macroeconomic catalyst that pushed it down. We still haven't quite touched this level, but we definitely hit a lot of our buy levels. So as we do, these are Fibonacci trend extensions and Fibonacci retracements. So we were, this was a level that we wanted for profit taking. We took a bunch of profit, and then we, had a major sell-off. So Fibonacci does it once again. And then we use the same ones to buy back in. So we bought here, we bought here, we bought here, we bought here. We did not get to buy here quite yet, because it didn't really touch that level, which is upsetting. However, this day was just such a massive sell-off that outside of our orders filling, we kept manually buying, all the way down, because that day the market had corrected itself for more than 1%, which is outside of the normal range. So that's when we literally manually input orders. So we were able to buy this dip all the way down. Just didn't fill these orders that would preset. Yesterday was another day like that, when the market corrected itself 2%, which is a massive overreaction. So we had, these orders fill once again, but then we also manually inputted more orders because we just wanted to make sure we capitalize on that dip. Truly. So we'll see what happens today. Futures are a little bit green, not too green, but it looks, that there's some dip buying. Not too much. I think right now the market's also strained by waiting for the debt ceiling to be raised, and investors are probably nervous to be overly buying the dip in case that situation is still not being resolved. Yellen said yesterday that we're going to run out of money on October 18th. So, there's plenty of time between now and October 18th for another massive dip if they don't figure out the situation. I have a whole video on the debt ceiling on this channel that I just uploaded yesterday, so be sure to watch it to understand more what's happening there. But anyway, let's look at the next profit taking if this is the bottom. So we have the top and we have the bottom. And the market normally pulls back on the 50% Fibonacci trend extension. Traditionally, that's where we get the pullback. So the next time we take massive profit would be here at 46.80. Now note, in order to determine the profit taking, we need a bottom. So let's say the market all of a sudden now has a bigger dip and dips all the way here, then profit taking is on the same level as our last profit taking. Or if it dips all the way here, then profit taking is here. So profit taking moves depending on where the bottom is. I'm going to leave it here in the event this is the bottom, and then if we make a new low, I can adjust it. But for the general market, the S&P 500, this is where I'm looking to take profit next. Not these like mini profit I don't really pay attention to unless I have individual positions, so individual stocks that I want to get out of because of sector rotations. As you guys know, if you pick individual stocks, that's a higher risk strategy. It's a lot more difficult to beat the market. Hedge funds can't even do it. So if you're doing that, you have to constantly manage your portfolio, right? And be in tune with what's going on in the world, what's going on in the markets, and where investors are looking at. So whenever the yields are rising, there are sector rotations. Investors get out of growth, tech, and other riskier assets that have higher valuations, higher PE ratios, and they go into value. And when the yield is rising, it's closely related to the banking sector. So a lot of financial stocks do well. And then when you have inflation, you have all materials go up. So commodity trades and companies that are affected by commodities go up. So you have to follow all these things if you want to invest in individual stocks. So on these mini profit takings is when, if I anticipate a sector rotation, I will take profits on individual positions and buy other individual positions. But when it comes to just shaving profits off on the general market positions, this is really, I wouldn't touch it before this level. I took a lot of profit here. So this would be the next level, and then I'm just buying until then. So that's it, you guys. I hope this was helpful. I guess I can just quickly show this to you on the VOO because we use VOO for our dollar cost averaging. Here I even left our last profit taking, which also, consolidated for a few days and had a big dip. We do really nail these profit takings, I have to say, if I don't say so myself, but it's just Fibonacci, really. But you still have to pick the correct trends, and after years of doing it, you sort of learn what the market does. So I'm just doing this so that I can have an actual dollar amount where I'm taking profit next, because I dollar cost average in VO. So on 432, VO would be my next profit taking. The last one was 417. Next one I'm going to take at 432. The one before that was on 400. So, that's how I plan out my long-term positions. Okay, you guys, I will see you tomorrow. Be sure to watch all the videos I reference here so that you can motivate me to do more. Talk soon.